Today we are going deep into something that most people in this market are completely missing right now. Everyone is reacting to the war. Everyone is reacting to the mining company losses. Everyone is reacting to the price dropping and bouncing and dropping again. And I get it. When the noise is this loud, it is hard to hear anything else. But underneath all of that noise, there is a signal. A very clear, very consistent, very historically reliable signal that tells you exactly where Bitcoin is in its cycle right now, what is about to happen next, and why the current moment, as painful as it feels, is not the end of the story. It is actually one of the most important and predictable parts of it. Here's what we are covering today. We are talking about Bitcoin's midterm year cycle and the pattern that has shown up in 2014, in 2018, and in 2022 with almost identical timing. We are talking about where that pattern says we are right now in early March 2026 and what it says comes next. We are talking about the April and May window and what it means for how you protect what you have built. And we are finishing on what every single prior midterm year eventually led to, because that is the part nobody is talking about right now. And it is the most important part. Let's get into it. First thing you need to understand is what a midterm year actually is in Bitcoin's cycle. Bitcoin halves every 4 years. The halving cuts the mining reward in half, which reduces the daily supply of new Bitcoin permanently. After the halving comes the post-halving year, and then comes the midterm year, which is the second year after the halving. We have had 4 of these now: 2014, 2018, 2022, and right now 2026. And what those 4 years have in common when you study them is a pattern so consistent it almost feels like Bitcoin is following a script. Here's the pattern. In every single midterm year, Bitcoin gets a move up early in the year. That early move always generates excitement. People start calling for new highs. The supercycle narrative comes back. People convince themselves the old rules no longer apply and this time things are different. And then Bitcoin fades that move hard. It drops. It forms a low sometime in February. Then it gets a relief rally back up in early March. And then the real weakness opens up heading into April and May. Every single midterm year, same sequence, different prices, different news, same human behavior, same pattern. Now here is where it gets specific, and this is the part I want you to really absorb, because the precision here is not something you can dismiss as coincidence. In 2014, Bitcoin formed its first significant low in early February. Then it formed a second lower low in the final week of February. Then in the very first days of March, it had a sharp rally back up, hit resistance, got rejected, and then sold off again into April, where a new low formed around April 11th. In 2018, Bitcoin formed its first significant low on February 6th. The rally back came, and the local high, the point where the relief ran out, formed on March 5th. And then a new low appeared in early April. In 2022, Bitcoin formed its first low in late January. Then a second low in the final week of February, specifically February 24th. A lower high formed in early March. And then because the 2022 cycle had a bit more complexity to it, Bitcoin managed to hold on a little longer before the bigger drop came in May. Now here is 2026. Bitcoin formed its first significant low on February 6th, exact same date as the initial low in 2018. Then Bitcoin formed its second low on February 24th, exact same date as the secondary low in 2022, one day earlier than the secondary low in 2014. We are talking about a market that in 2026 hit its key lows on the same calendar dates, sometimes the exact same day, as every prior midterm year going back over a decade. The price levels are completely different. Bitcoin in 2018 was at $6,000. Bitcoin now is at $66,000. The percentage moves are different. The news events driving sentiment are different. But the timing, the human emotional rhythm underneath all of it is identical. And right now, in the first week of March 2026, we are sitting at the point in this pattern where the lower high forms, the relief rally that follows a brutal February, the bounce that feels like maybe this is the turn, the move that gets people excited again and starts generating positive headlines and optimistic takes. And based on everything prior cycles have shown, that relief rally is real, but it is temporary. It is a lower high. And after it forms, the next window of weakness opens. Now I want to be precise about what I mean by window of weakness, because this is where a lot of people get the wrong idea. A window of weakness in April and May does not automatically mean Bitcoin crashes to new lows below the February bottom. In 2018, Bitcoin found a low in February at around $6,000, and when the April weakness hit, Bitcoin was still holding above that February low. It did not break lower until the summer. The April window was a period of pressure and pain, but it was not necessarily the deepest point of the cycle. What it was, every single time, was a period that punished the people who chased the March relief rally, the people who saw Bitcoin bouncing strongly in early March, who felt the fear of missing out kicking in, who told themselves that the bottom was in and bought heavily into the rally, Those people got hurt in April and May every single time, in every cycle, without exception. And that is the most important practical lesson in all of this. The goal during a midterm year is not to trade every bounce. The goal is to not be that person. The goal is capital preservation, holding what you have through the March excitement without adding heavily at a point that prior cycles have consistently shown to be a lower high, and then watching closely as April and May develop to understand where the real support is and whether a genuine bottom is forming. Now I want to give you some perspective on where the structural support levels sit, because understanding this helps you know what you are watching for. The 200-week moving average, which is one of the most respected long-term Bitcoin support indicators in the entire market, currently sits around $58,000. That level has acted as major support in every significant Bitcoin downturn going back years. In 2018, Bitcoin ultimately tested the equivalent of that level during its deepest weakness. In 2022, Bitcoin broke below it temporarily before recovering. 58 to 62,000 is the zone where the real buyers historically show up, where long-term holders who understand the cycle add with conviction, where the people who are not reacting to short-term noise make their moves. If the April and May window produces a test of that zone and Bitcoin holds it, that is one of the most significant buying opportunities this cycle will produce. If it breaks below it with conviction, that tells you the weakness has more depth to it and you adjust accordingly. Either way, that zone is the thing to watch. Not the daily price movements, not the war headlines, not the mining company earnings reports, the 58 to 62,000 structural support zone, and how Bitcoin behaves when it gets tested. Now here is what I really want you to understand, and this is the part that separates the people who come out of midterm years stronger from the people who come out of them damaged. Every single midterm year in Bitcoin's history felt exactly like this while it was happening. In 2014, people were saying Bitcoin was dead. Mt. Gox had just collapsed. The biggest exchange in the world went to zero and took customer funds with it. The narrative was that Bitcoin was a scam. It was over. It had failed. It was going to zero. And from that environment, Bitcoin went on to eventually hit $20,000 in the next cycle. In 2018, people were saying the bubble had burst for good. The ICO craze was over. Regulators were cracking down globally. Bitcoin dropped from 20,000 to 3,000, and the consensus opinion was that it would never recover. From that bottom, Bitcoin went to 69,000. In 2022, a major stablecoin collapsed, taking $40 billion with it. One of the largest crypto exchanges in the world, FT, turned out to be fraud and wiped out billions more. Bitcoin dropped to 15,500. The narrative was complete systemic failure. From that low, Bitcoin went to 126,000. The midterm year is not Bitcoin breaking. It is Bitcoin resetting. Every time. Without exception. The supply reduction from the halving is permanent. The daily issuance of new Bitcoin after the 2024 halving is lower forever. The institutional infrastructure through ETFs and custody services is deeper than it has ever been at this point in any prior cycle. The number of entities holding Bitcoin on behalf of long-term investors is larger than ever before. These are not things that reverse during a midterm year pullback. They are structural realities that persist through every correction and every window of weakness. What the midterm year does is it takes Bitcoin from the hands of the people who bought it for the wrong reasons at the wrong prices and moves it to the hands of the people who understand what they are holding and why. Every time someone panic sells at 62,000 because they cannot handle the uncertainty, they hand that Bitcoin to someone who has studied the cycle and is buying with conviction. That transfer of Bitcoin from weak hands to strong hands is the quiet work that midterm years do. It is not visible in the headlines. It is not exciting, but it is what builds the foundation for the next leg higher. And when that foundation is built, when the weak hands have been flushed, when the miners who could not survive have capitulated, when the leveraged positions have been liquidated, when the noise has exhausted itself, Bitcoin does what it has always done. It starts moving higher, quietly at first, then with more conviction, then with the kind of momentum that makes everyone who sold at 60,000 feel like they made the worst financial decision of their life. That moment is not here yet. The pattern says we are in the lower high formation phase of early March. The pattern says the April and May window of weakness is still ahead. The pattern says there is more pain to navigate before the foundation is fully built. But the pattern also says with complete consistency across every prior cycle that what comes after the midterm year pain is not more pain, it is recovery. And then eventually it is expansion that makes the current prices look impossibly cheap in hindsight. So here is the practical takeaway. Do not chase this March rally. Understand it for what the historical pattern says it is, a relief bounce in a midterm year that forms a lower high before weakness returns in April and May. Keep your eyes on the 58 to 62,000 zone as the structural support level that matters most. If that holds during the April and May weakness, you are watching the bottom of this cycle form in real time. If it breaks, You have more information and you adjust. Most importantly, do not lose sight of the larger picture. The same cycle that is making March 2026 feel uncertain and painful is the same cycle that made February 2015, February 2019, and February 2023 feel uncertain and painful. And every single one of those moments was followed by one of the greatest Bitcoin bull runs in history. You are not watching Bitcoin break. You are watching Bitcoin do exactly what it has always done in midterm years: reset, rebuild, and set up for what comes next. The data has been consistent for over a decade. The pattern has not broken. And the long-term direction of a scarce asset with growing institutional adoption, permanent supply reduction from the halving, and expanding global demand has not changed because of a difficult March. Stay patient. Stay disciplined. Know where you are in the cycle. This is not financial advice. This is financial education. Stay sharp.